Good morning. This is Larry McMillan with a stock market update on Monday, December 30th. Well, we're in the supposedly quiet holiday period here, and it's also supposedly the Santa Claus rally period. Neither one of those is holding true. It's not quiet. The market was down on Friday, and it's down a lot more today, or at least so far today. And the Santa Claus rally is certainly not developing. Now, that can have some ramifications after it ends. It ends on the second trading day of the new year, so there's still time for the market to rally. But if it ends up with a loss during that time period, it can be very negative for the market after that. So the old saying, if Santa Claus should fail to call, bears may come to Broad and Wall, was coined by the inventor of the system, Yale Hirsch. The S&P has pulled back to 5870 once again and bounced off there once again, so that still remains strong support. If it were to give way and close below there for 2 consecutive days, then we would abandon our core bullish position. But we are continuing to hold that position until that happens, or unless that happens. So some of the market internals have gotten quite negative. The equity-only put-call ratios are rising. I wouldn't say they're exploding to the upside, but they are still rising, so that's bearish. Breadth has been pretty terrible, and so there was a little improvement last week, and it looked like we might get a buy signal from breadth, but that didn't happen. So those oscillators are still on sell signals, and new highs continue to dominate new lows on the New York Stock Exchange, so that's another negative indicator. VIX has not really joined in the bearish party. I mean, it's rising a little bit. It could go into spiking mode today. We have a spike peak buy signal in place as it is. If it were to be followed by another one, within a 22-day holding period, we would not trade the second one. We'd just do the first one. Also, the trend of VIX had given a buy signal last week, but now that's also could be quickly in jeopardy. Sometimes we can look at the construct of volatility derivatives to get a clue as to what's the internal, going on in the market internally with volatility. And that's remaining bullish for stocks. The term structures are sloping upwards. We're not getting any inversion even on the front end of the curve. So that's remainingly a bullish position. But still, this selling is a bit worrisome, especially coming in a period of time when you wouldn't really expect it. I don't know. I don't think people are selling so they can pay taxes. Maybe they would sell next year, but not this year for that reason. In any case, we're maintaining our core bullish position as long as SPX can continue to close above 5870, but we are trading other signals around that. I invite you to visit our website. We're having some year-end specials right now, and you can take a look at our daily newsletters so you can keep up to date with this quickly changing environment on a more timely basis. Meanwhile, have a happy new year and have a great week trading.